Let's get back to Starbucks because the company beating on both the top and bottom line. When you take a look at the reaction in the stock, off just about 1%, $8.7 billion in revenue, adjusted EPS of just about 74 cents. Also comp sales, overall comp sales coming in better than expected, growth of 11%. Here with a deeper dive on these numbers, we have Sean Dunlop. He's a Morningstar equity analyst. Sean, it's great to see you here. So just first, your reaction, because to me, the numbers look strong, yet the street doesn't seem to be too excited about it.
It's true. Yeah, certainly a beat on the top and the bottom line. Comparable store sales strength looked great. Continuing to see positive traffic in the United States is impressive and suggests that the firm has not exhausted its pricing power yet. So I would say that the street reaction is potentially reflective of expectations for demand normalizing in the back half of the year. That's certainly something that we're cautious about, although it was interesting to see the firm reaffirm its free cash flow guidance for the full year. So I guess we'll see on the call.
Sean, I wonder if we can broaden this out just a bit because, we were just talking about where the trade downs are happening with consumers as they have to deal with higher prices that are still out there. It certainly doesn't feel like that's necessarily happening at Starbucks. But when you look at the broader sector overall, where are you seeing some of those changes?
Yeah, we saw traffic at McDonald's is up 5% during its most recent quarter. And so we're clearly seeing consumers trade down into the QSR category from somewhere. A lot of the time that might come from upscale fast casual, that might come from full service dining. But by and large, restaurant spending has held up really well year to date, even though we've seen consumer savings rates flag. So as we move into the back half of the year, it will be interesting to see. That core Starbucks consumer doesn't usually trade down the menu so much as they trade out of the category. Maybe you go a couple fewer times per week or per month. And that is where we'd really expect to see pressure show up potentially.
Sean, when you take a look at the average ticket here, an increase of just about 4%, Starbucks has clearly had pricing power up until this point. Do they still, and could we potentially see higher prices here over the next quarter or two?
Yeah, I think it's unlikely that we'll see higher incremental pricing. I'd say most operators in our coverage have been very cognizant of a pressured consumer and very careful to try to do what we'd call a barbell pricing strategy, where you've got some consumers that will trade into premium products, and maybe that's where you take prices, whereas some of the more day-to-day product, for example, for Starbucks, like a hot coffee, they'd be very reluctant to take price increases there. Now, with 4% increases in check, part of that's going to be just normalizing channel mix as people return to downtown occasions where they're just ordering for themselves rather than for a full family in the suburbs, for example. But given that is reflective of both price and mix, there's a little bit of noise in the data, so it'd be good to see that unpacked in the call.
Yeah, aside from the U.S., we have seen a bit of a reversal for Starbucks, especially in their other large market, China, given the pickup that they've seen. How much do you anticipate that momentum to pick up? It feels like there's a bit of a mixed bag when you talk to people about how the reopening is happening over in China, although certainly it feels like things are starting to slowly pick up.
Yeah, we're just getting to normal in the Chinese market, and it's important for Starbucks, but it's more important as you look forward. So it's good to see them continue to invest heavily in opening new stores in that region. We expect a pretty sharp snapback in the region over the back half of the fiscal year. I believe we have something to the effect of 60% comp sales growth in the third quarter as you lap some pretty draconian mobility restrictions. Now, just to give investors a sense of the magnitude of that market, it's about 10% of Starbucks' consolidated revenues, but it is important because it represents about half of the international net new units over the next decade. So we'll definitely be keeping an eye on the market. The rebound has been anything but linear, but certainly see a better prospects for the second half of the year.
Sean will likely hear from Loxman on this earnings call. It would be his first if he is, in fact, on that call. What do you want to hear from him, and what do you make of his presence and what he has done with the company? It's only been a couple weeks, but what you have seen so far.
Yeah, it will be very interesting. I would expect that it would be non-news this quarter, sort of walking the party line and the strategic priorities as they've been laid out in the firm's reinvention plan. Anything other than that, I think, would be newsworthy if he seems to take a different tack towards labor relations or perhaps emphasizing or de-emphasizing other company-owned markets like the UK or like Japan. That would be something that would certainly catch the eye.
Sean Dunlop joining us there with Starbucks' latest results. Thanks so much for that.